Hello everyone, welcome back to my channel. So in this episode, I'm going to show you how to draw demand and supply zones. Okay, so let's dive in. So here we are back on TradingView and I have the Bitcoin chart opened. So in this strategy, it's basically how smart money plays the market. So how this strategy works is you have to search for a big impulse move. So retail traders, let's say, wouldn't be able to move the market as much as smart money would. So in the sense that the order book gets filled up and price increases rapidly. So you see huge impulse candles. So how this strategy works is there's two ways you can draw a demand and supply zone. So the first way is this way. So I'll show you here. So you're looking for big impulse moves in the market. So for example, this candle right here is a big impulse move. So you look for the previous red candle. So it would be this one here. So then you get your rectangle tool over here on the left hand side of the screen, and you draw from the bottom of that wick on that red candle up to the top, and then you just bring it right across. So as you can see, the price shooted off here, moved upwards. The one thing you have to look out for this zone to be valid is it has to break structure. So if you look at here, this was the previous high. And as you can see, then it wicked and broke structure of the previous swing high. So then you know that this is a valid demand zone. So that's really important. When price shoots up, it has to break the previous high to break structure to know that this zone is valid. As you can see, then the price did start to trend downwards once it broke structure. And you see this red candle, it wicked back into the demand zone. So this is where retail traders, once they see that it breaks structure, they'd go long, they get extremely bullish, but then the market decides to bring the price back down again, wicks back into the demand zone, and then price then moves off again. And as you can see, it actually broke structure again, sold off again, and wicked back into the demand zone and continued to move higher. So in this strategy, it makes you patient and makes you wait for trades. Now, this is the best way to be, because if you rush into a trade, you're going to get wrecked. So I love the supply and demand because you can set your zones, set alerts, and wait for the price to come back in your zone, and then take your trade. So here's another perfect example. You have price selling off here, and then you had a huge impulse candle, and price shoot it off to the upside. So again, how we draw it, we go back to this red candle, the previous red candle before the big impulse move. And as you can see that the big impulse move did break structure. So you see here, it broke the structure of the previous swing high. And from the low of the wick of that red candle to the high of that wick will be right about here. So you can see price broke structure, big move to the upside, and it slowly made its way back down to the demand zone. You see here that there was a big impulse move, and you see that red wick wicked straight into the demand zone, shot back up, wicked again for the second time, and moved back up again. Now you can see in this strategy, like, it didn't actually break all-time highs, but if you were being smart about it, you would have taken your first take profit zone. So we draw in a horizontal line here. So your first TP would have been, let's say, here, because you can see that this was acting as resistance all the way along here. And then another thing I always like to look at is the 200-day EMA. Because if you back test this, you can always see it acts as support and resistance. And funny enough here, when I put it in, as you can see, the price did shoot up and just kissed the 200 EMA and then sold off again. So that would have been your second TP. Now, in this move, I would have expected to go higher. So maybe I would have drawn in a few more TPs, let's say here and maybe up here. And then the last one then to break the highs up here. But still, all in all, it did hit the demand zone and did move back up again. Now I would like to show you how to draw the supply zones. It's very similar to demand, but it's literally just the opposite. So as you can see here, price was moving upwards and then there was a sharp impulse candle move to the downside. And this candle here basically engulfed this candle. So you know it was a big impulse move. And also to validate this, it broke structure here. So this low here was a break of structure of the previous low. So then this validates this supply zone. From the top of this wick here to the bottom of the wick, and then we just bring it all the way out. So as you can see here, price, big impulse move down, chopped around a little bit, and eventually made its way back up to supply where it then slowed off again. So this teaches you to create areas, supply and demand areas, for you to be patient and to wait for price to come back into your area to put in on a short or a long. Now, it's not guaranteed to work all the time. As I said in my previous videos, the idea of trading is it just gives you an edge and you have to use it, incorporate it with other indicators and chart patterns and market structure. So as you can see here is another example. We have another big impulse candle, red candle to the downside, engulfing the previous green, breaking market structure as in it's putting in a lower low than this low here. So you can see this area here would be the break of structure. That would validate your supply zone. So then you can go ahead, go back to your rectangle here, and you can draw in your supply zone. So the top of the wick of the green candle to the bottom of the green candle, or the bottom of the wick of the green candle, should I say. So as you can see, then the price sold off and eventually it made its way back into your supply zone where you could have taken a trade and then the price then sold off. Now, the only downside to using this method is you don't catch all trades because you're using the previous candle from the impulse move. It's a very small zone. So what other traders like to use is to draw bigger demand and supply zones. So when you look at the overall chart, you're looking for these big impulse moves to the upside or to the downside. And they're basically inefficiencies. So price likes to fill all those inefficiencies. But if the candle is very small, you're going to have a very small supply zone. So you're going to miss out on trades. So what some traders like to do is they like to draw their supply and demand zones a lot bigger. Now to draw this zone is you get the meat of the move here. So the lower bound of the wicks and right exactly where the upper bound takes off. So upper bound at the point of where candle bodies line up. Then you use the lower bound below the wicks. So it's very similar to the supply zone. Market moves away quickly. That should be the and it normally sometimes lines up with the bodies of the candle. This should be the lower end of the bound, and then the higher where the wicks of the candles top out. So this would be the higher. And again, it's showing you in this example here, the bodies of the candles, the highest wicks, supply zone, and then you see where the impulse move starts. So this is just an idea here on the charts. So you can see I'm using the bodies of the wicks and just where the impulse starts. And again, I'm using the top where the top of the wicks top out. And you'll see over here where the start of the impulse move candle and the lower wicks for the bottom zone. And you'll see by using in this method, you'll catch more trades than the previous method. So that is your video on how to draw supply and demand zones. If you got value out of this, please go down, hit the like, hit the subscribe, and I will see you in the next video.